Hello, everyone. Welcome back to the next TE360 session, the last one in this series of 5 sessions about token engineering from many perspectives. I see many familiar names. It's great to see you again. Okay. Welcome, everyone. Yeah, and today we are going to discuss Cryptonetwork Governance as capital. This is a super interesting topic, since this article that we'll discuss today, written by Joel Montenegro, managing partner at Placeholder Ventures, was published back in early 2019, when there was no DeFi and DAOs at its very, very early stage. And it's so cool to look at this article again and see what happened since then, where we are at today, and where this might lead us in the future. And of course, super relevant for token engineers. All right. So if you haven't had the chance to take a look at the article, here's the link again. It's a tiny, short article, but with a lot of interesting, let's say, statements. Okay. Basically, also interesting to read the investment thesis of Placeholders. Joel Montenegro being the managing partner of Placeholder Ventures. I invest in ventures that help redesign capitalism by distributing capital over the internet. Okay. I read the first quote, as we always do, and then, yeah, of course, I guess we'll have a nice discussion about these quotes. Joel Montenegro. Capital is, in essence, the power to organize the economic resources of a social system, and it's worth a function of how much of those resources can be directed to the holder's benefit. So note, he's not talking about tokens yet. Let this sink in. The power to organize the economic resources of a social system. This is what how he defines capital. The power to organize economic resources of a social system. Now, we, looking from a token perspective, think about the token-based governance systems we know today, 3 years after this article was published. What comes to mind as tokens now to organize or to decide on the resources of a social system? What examples would you give to this capital governance as capital? Tokens to organize the resources of a social system. Happy to have your comments. You can drop it to the chat or raise your hands and switch on your mic. Let's collect examples. Anyone being the first one? How do we in token-based, governance systems, how do we organize the resources of our token networks being social systems? Any ideas? Is there anything you could think of, examples that you have seen, maybe decision-making you have been part of?
Like the ENS one, where you elect a representative or delegate.
Right. Maybe you would like to elaborate a little bit more for those who don't know ENS.
So like, I guess there are like two that I've come across. One is where like everyone literally has like one person, one vote, and you like vote on like every decision. Or like ENS, you can basically you elect delegates into a position, and once you've elected them, they then manage like the voting process
Right.
on your behalf, and then you can always move your vote from one delegate to another. And then I think there's like a third iteration of that, which is where either you can vote or you can delegate your vote to someone. And so there's like a hybrid model.
Mm-hmm. So this is the mechanism how voting in the ENS system works, and delegation is actually a pattern we see in many DAOs, since participation is a critical thing. And then a delegate, of course, is able to get into a pretty powerful position with many votes delegated to an individual or to a representing wallet, basically, and being then able to take part in the decision making and have a say. Thanks, great examples. Now we have some more examples in the chat. Rohan added staking. Can you tell us a little bit more, Rohan, for those? I mean, staking.
So staking is voting on which block gets into the blockchain. So obviously there's a governance function there.
Mm-hmm. Right.
So there's a participatory mechanism in that you have to lock up your liquidity. So there's a cost to behaving badly as well.
True. So staking has become prominent, of course, in proof of stake, consensus mechanisms, but also in other protocols and basically incentive mechanisms. As you say, you lock or stake on something, can be data, it can be a transaction, and then and this is basically voting on something. So you signal support with your liquidity and then participate in the rewards that are distributed. Thanks for sharing, Rohan. Good example. Aline, incentivize people to participate on decision and solutions. Would you like to add some more comments here?
Yeah, good morning, everyone. For me, to create like the value of our capital is people participating and seeing the decisions as powerful as can be. And so if one token has this powerful to make changing people's life. For example, if we have a DAO who has a token that gives me access to internet, for example, in Brazil would be something very powerful. And so if people vote on making that utility from our token we make possible, would be a way to add value to people's life throughout the token. Yeah.
Right.
So we have to incentivize people to participate in this process and decision, just like a designing thinking way to figure out what people really need in their lives, like solutions.
Good call. And you are actually touching on something interesting that will come at the very end of this session, which is, okay, let's say, versions of incentivizing people to participate and vote in all its positive and maybe also negative versions and variants. Okay, let me check. Code for new project emissions governance. Here's an interesting one. Mark, you added emissions and governance.
Yeah, I guess we can, from the get-go, we can decide, from an emission schedule, what we're going to incentivize, be it could be kind of ecosystem rewards or kind of staking rewards. Yeah, I guess those are kind of my initial thoughts.
I mean, here, basically, in all kinds of token designs, you're thinking about incentives. Here, today, our major focus is governance, and there are, let's say, there's a certain tweak in this. You participate in the system and you invest, or the capital we are discussing is governance rights. And this is, to Joel Montenegro, also something very particular, because it opens up new opportunities in steering or deciding on a network's direction and decisions. And this is something really new. So he gives, I continue with his article, and he gives some more examples of what he needs, of the resources of the social systems and the decisions. He says, okay, examples would be productive and human capital, influence which goods and services are offered in this economy, and thus how income is ultimately distributed. Financial capital determines the distribution of purchasing power, and equity capital presides over how a company's resources are used. Intangible forms of capital also exhibit this quality. Political capital, for example, governs the rules of markets, and social capital drives human attention and thus behavior. Okay, in the second part of the introductory sentence that I've read out first, capital is in essence the power to organize the economic resources of a social system, and its worth a function of how much of those resources can be directed to the holder's benefit. Now we are talking about the value of this governance capital. The value of this new form of capital. This insight, I quote again, that capital is governance and vice versa, governance is capital, leads to the source of its intrinsic value. Whoever has control over a pool of important resources also has the potential to direct some of those resources to their own benefit. So the value of a system's capital is proportional to the value of the resources it governs. Now let's discuss the second part, the value. Are there any examples you know in the traditional world where this power of control has a value? Are there any examples where you say, okay, there you can put a number on this power of control, this governance power? Yeah. SB, I'm not sure if this is something new. Governance has always been some kind of capital. Let us know more. SB, would you like to switch on your mic? SB, are you there? Micro issues. Okay, no problem. Thanks for dropping your comment in the chat. Usually the people who govern an organization usually get more stocks, and this equals more power. Totally right. So the stocks are actually a voting power to some extent at enterprises. And so we know these kind of, there is a tradable decision-making right already in existence. And these tradable decision-making rights also have a value since they are tradable and even give some or reflect the value of this company behind it. And the stocks are at the same time a right to a piece of the company's books and profits. So it's assets under power, how Monegro puts it. And he gives more examples in the article, but let's collect more in the call here as well. Okay, politicians get lobbied and offered seats in companies. Okay, the value of governance rights. That's interesting, Mark. Thanks for sharing this. And Rohan, you also raised your hand.
Yeah, like a real-time example would be Russia getting kicked out of SWIFT. So essentially it's not value per se, but value lost I think they lost something like 30% of the GDP. So you could put a value on how much value they would be in joining the Swift network versus if you were on your own. Kind of, I know it doesn't really. It's not a positive value in the sense; it's a negative value. It's more.
Yeah, it's a cost in a sense, and the, let's say, the costs of losing access, and in a sense, obviously also, I don't know the exact decision-making processes of Swift, I must say, and how.
I think there's a governing board. But
okay.
The majority, I think it's there. I'm not sure exactly, but I think if all the governing board decides to kick someone off, they could. It's similar. I think there was a similar decision on Iran earlier. So yeah, there's a quantifiable cost to not being in Swift, and that having a board seat and having governing rights is.
Yeah. All right. Good. Mark added also voters in. Martino. That's also interesting. You added price differentials between voting and non-voting stocks. Good examples. And Stella, you've raised your hand.
Yeah, I just wanted to quickly add up that I think everything everyone posted in the chat is true. I very much agree with Mark on the lobbying stuff. I think it's not very direct, but it is definitely there. The more money you have, the more people you can pay to do lobbying for you. So it's kind of, part of how to corrupt the system, which, we're kind of trying to avoid on the blockchain, right? So the question is, how can we actually do that? Because do we actually have the insights to be sure that this is not happening? Probably we don't. And I wanted to kind of ask, isn't this a very singular-minded view? I actually appreciate this article a lot, but it felt very much not holistic, not like, the flower diagram that I really enjoyed. And I felt like it was so much driven by capital and finances that it kind of forgot all the rest along the way. So
what is missing from your point of view?
Oh man, really everything. It doesn't even consider that there are other projects out there who don't necessarily have this idea of giving financial value back all the time, but rather focus on giving other values back to the community. It's not even a consideration. So just saying, right? A DeFi protocol obviously wants to give, this is their whole deal, right? They want to give money back to people. If they don't give that, no one would be using a DeFi protocol. But what about other projects? What about, collector DAOs? What about DAOs that are centered around even charities? There's this meme coin, Shiba Girlfriend, right? It's not actually a meme coin. All their proceeds are going to a project called Women in Tech. How do I realized this article was well written before the time, and that's probably why. Just saying, it felt a little bit not having quite the whole view. And yeah, sorry, just my feeling about it.
That's totally cool, Stella, because actually I selected this article on purpose. I want you to be aware of, yes, we can tokenize pretty much everything. And as you say, it's not only about money. It can be about reputation. It can be about access. It can be about belonging, very, very intangible values, things that people in a network value. And at the same time, the moment we tokenize, it becomes capital because it can be priced, it can be traded. We can build a market. And that's a huge opportunity. And we see that in DeFi, what suddenly happens with tokenized rights like governance. And there is also a risk to it, right? Because then it becomes a matter of speculation. And we'll get back to this point in a minute. Thanks for adding your comments, Stella. And we have 2 raised hands. Christian.
Yes, thank you. I want to continue Stella's point a little bit from a different perspective, in that to me, the article only takes into account the capital effect. It doesn't take into account the actual governance and what that token is supposed to be doing. And it's supposed to be driving people to act within the system and to vote on what they want and to participate in it. Instead, to me, I read it from the standpoint of, this is a way for us to get more money, or this is a way for us to earn the transaction fees, and not necessarily in a way, this is for us to grow a community. And so that's just the way I read the article.
Right. And that's definitely a filter or a point of view. And you say, and it's legit to do that, to look through this lens only, or is this rather a criticism?
I think that the age of this article is that very tight lens, in the sense that when it was written, DAOs were in their infancy. If this had been written post DeFi summer, then I think it would have been a completely different topic, or maybe written a little differently in that, yes, you saw Uniswap go to the moon and back, but you also saw the community grow and voted on a lot of very good community enriching principles and proposals throughout the time as well. But then there's also been some other communities that have, in the sense of being decentralized in governance, it was more so just a way to raise money, and the community never really came together.
Yeah. So you say, if I'd like to reformulate and confirm, if you like it, you say there is something that maybe is beyond this capital point of view that is still a value to the network participants. But then I wonder, what's the problem with tokenizing it? Just maybe this is a little bit provocative.
Oh, I'm not saying there's a problem with tokenizing it. I think the problem is when you look at it from the standpoint of only making money, then you're missing out on the entire, potential, I guess, intrinsic value from the community standpoint. If you only look at capital, what's the difference between this and a stock? Well, nothing, because at the end of the day, my stock pays dividends. Well, my governance token gives me a claim on the 1% transaction fee from the protocol. So you're still making money the same way you would with a stock. The price goes up and down. Yeah, I can vote on things, but it's the other thing, the community. You can't get community in a stock. A stock is just other investors. You don't even see their addresses. You can't say, oh yeah, this person holds this many shares. All you know is, oh, this person controls 9% of Twitter. So the community, I think, is something that gets intrinsically priced into it, and that this article doesn't take into account that.
Okay. I mean, I could continue this conversation, but thanks for sharing, Christian. Really relevant points. And I'd like to hand over to Aline again.
Sorry, Angela, but I wanted to follow up to Stella's point. I think it's a very nice one, but I am more aligned with another point of view, as Christian said. But for me, I read capital and resources are just the core basic instruments that we have nowadays in the institution that is established, and we can have in DeFi or DAOs. We just need to think differently, like more flat organization than a triangle. So people will use and want to have access to this or that token according how much capital or resource can they have access. And right now in the world, we have capital resources, but we can't have access or voting on them. I think the article doesn't have to be specifically about DeFi, because even in DeFi, we will have to think about how capital works now to make it work in a DAO or in a DeFi concept.
All right. Yeah. Thanks for adding this comment, Aline. And there's more raised hands. Alex.
No, these are really interesting perspectives. It just makes me think of all of the, DAO tooling and wallet tooling, just all the tooling that's coming at such a rapid pace that would not resolve, but it would slightly tweak the incentives for a lot of these things. So, one random example would be, either POAP based or like NFT based skill set type voting, intra wallet messaging, if you have a proposal, because then you think about, okay, well, this person who was whitelisted in this DAO got all these tokens and he's just, sitting on a beach somewhere, whoever. And then, all of a sudden it goes up 10x or 100x. And then they come away without having to vote. And, so there's other mechanics too that, we've talked about before with diluting if they're not participating in various ways. And that's tokenomics that will be interesting to see play out.
Absolutely.
Just a general comment listening. Thank you.
Absolutely. And I think you highlight some of, let's say, one key difference that we can keep in mind here. Joel Montenegro is trying to define or to highlight that suddenly with governance tokens, governance becomes a capital asset. And that's just a statement. Now it rings immediately a bell. Wait, then governance power has a price. It can be traded. And then we have this problem of plutocracy, right? Or this is, I think, the underlying criticism here. So people with big wallets have big voting power and will have the governance power. And this is not something we feel is appropriate. Then there are other movements, like you say, POAPs, NFTs, skill-based, reputation-based governance power that can be different, right? So it's not about the money. It's rather about maybe trust, reputation, and this is spot on. And there are really interesting in the governance sphere. There are really interesting approaches. On how to find new models. Votes tied to individuals rather than tied to wallets or tied to money or investments. And then it's about the voting mechanisms. Keep in mind quadratic voting, trying to also capture not only the capital behind a voting, so more tokens, more voting power, but also the number of people gathering behind and supporting a particular idea. That's also an interesting mechanism to soften the effects of one token, one vote. Mm-hmm. But then there are also attack vectors to it. So this whole, I've seen it a couple of times in the chat, tokens in basically, if they are tradable, if they have a price, they become an asset, and yeah, we can shape it then in many directions. It's just important to keep it in mind. Martino, you'd like to add another comment here?
Yeah, just to reuse some of the injection from others. I think that one of the main points of this article is to underline the fact that the token with governance have great potential. And he stated in other articles, modern capitalism, we have this difference between currency and capital. And he spoke about capital in terms of equity, and that is a separation actually lead to concentration. So I don't want it to be too much harsh in this article. I think that he raised a great point. So the great point is currency. Even a very successful project like Terra, and you are in the DAO, if the people are plugging out the money from your project, you are voting on nothing, because it is the combination between currency and capital that makes things work. So the value of this token with governance of the game. This is the ambition that he wanted to underline, in my understanding.
Yep. Thanks for highlighting this. And let's take a final comment from Omolara.
Good day, everyone, or evening,
Hello.
or morning. I just was kind of taken aback when the gentleman had mentioned that tokenomics or having any type of token governance would lead to capitalism or an overrush of capitalism and not really look at community. And I kind of look at it the other way, that this is creating market so that we don't necessarily have to participate in a capitalistic society where people are earning off of the profit of others. Instead, we are putting in mechanisms to allow people to earn their own coin, almost like creating a co-op, which will keep you from having any government influence, because you are creating, therefore, your own government in a way, and your own governance. And so what I got from the article was more ways to sustain that and to not really look at it as capitalistic. Like, what do we have before capitalism? We have market, right?
So you say, okay, let's not forget that token and token-based governance is also an opportunity for everyone, no matter where you come from, no matter what role you play in this ecosystem, to take part and to have a decision-making right. Is this?
Yes, that's yes, that's the point. That's what I was hoping we would all get from that, and ways that we can create that better,
Absolutely. Totally agree. I think this is a huge promise in cryptoeconomic systems, the ownership, a new ownership of this global infrastructure, and also new forms of forming coalitions, right? Of teaming up and also of pooling your governance power in your best interest. Stella raising her hand again.
Yes, I think a large part of this is also the fact on how you allocate the initial token launch. So it's not just the token itself, right? It's also how fair are the beginning allocations of the token. So if you decide to just throw it all out there like ApeCoin did, right? First of all, you can rug pull your own project almost, which I thought was kind of hilarious. Sorry, maybe I'm the only one who thought that was hilarious. And but also, like, if you actually do it in a fair way, then you get like more of a guarantee that more, like, a higher diversity of people actually get a say in your governance, right? Because we've been debating a lot in the project I'm part of, like, how much does governance actually weigh when it comes to tokens? Should it be actually weighed in tokens at all? Like, if someone can just buy their way into a project, right? Does this really mean he should have like the most say in what the project will do next? Like, is that then, really a new form of governance? Because the chat was full of that, right? It actually wasn't, or it wouldn't be. So it's kind of maybe more like a question than a comment, actually. Like, how can we solve that other than like fair allocations? But what more can we do?
Mm-hmm. Totally legit, especially since there are many studies that say that wealth distribution is hard to change now generally in economies. Now, if we start with a very unequal wealth distribution in a tokenized protocol, in a tokenized network, since this is governance power, it will be hard to change. And here's another comment that it's probably good to keep in mind. The current structure we have for example, in many DeFi protocols or other tokenized projects, the current situation we have is in many cases not the result of missing creativity. It's because these projects try to raise money early on to be able to build it and to be able to scale up an ecosystem. And this is the initial token launch. And they can only do that or include participants from most of the jurisdictions around the world via building a decentralized, truly decentralized network. And then they launch a governance token and establish a governance system. And this is how you see this, okay, token launch, the associated rights, the distribution of the tokens. And unfortunately enough, this is many times a result of the, let's say, regulation or regulatory in fact and felt requirements and lesser results of what actually would be possible. Just saying. Okay, I'd like to continue with the next step in this article, where Joel Montenegro refers to the power structure in crypto networks. They might have evolved and become much more sophisticated, but in general, they still apply. The two pillars of trust of a crypto network are its crypto-economic and governance models. The crypto-economic model defines the rules of the system, like what is the unit of work, how do users pay, how miners are compensated, the token supply model, etc. While the governance model defines who has the power to change those rules and under which conditions. And I think this link is also important. So the governance itself is not creating or is not the actual source of rewards, but the governance tokens and rights are providing access to the rewards around the crypto-economic model. Unit of works, how to use this pays, can be fee returns, other returns, it can be access, it can be even direct rewards like profits, fees, shares, yields, and indirect like access rights. And these two are interconnected. And in many cases today, the same token provides you both direct returns and the access to governance decisions. And finally, Monegro closes with a summary of governance tokens. If capital is the power to organize economic resources, then the power to change the rules of a crypto network forms its capital. And when that power takes the form of a token, it can be traded, priced, and modeled by market. In this context, a network assets under power include, first, the token itself, which is controlled by the crypto economic policy. Second, the productive resources as controlled by the definition of work, for example, in a consensus protocol. And third, the flows of value as controlled by regulating payment mechanics and other incentives for miners, users, and investors. And as the value of these resources grows, so does the value of the capital which governs them. And he continues with a great example that tokenized governance power can be designed in sophisticated ways. I just read this briefly. Certain proof of stake systems, Rohan mentioned them beforehand, are good examples of this idea. Here, miners are required to lock a certain amount of tokens in order to be allowed the right to work for the network. the value which flows from users to the supply side is then distributed to miners proportionally to their stake. This way, tokens can be staked are a form of capital in that they represent the power to organize some of the economic resources of the network, such as production capacity and distribution of income. And ultimately, this is a form of governance in the sense that staking is a mechanism for deciding how income should be allocated across miners. And so, as the value of that income grows with user demand, so does the value of stakeable tokens. So this is again an example of how these governance rights, the income, the flow of rewards, and the resources themselves, like work, are all captured in one token. It can be several tokens, but it can be even only one single token. And that makes also the task for token engineers so very hard because of the degree how these value streams and mechanisms are entangled and interconnected. Now, closing this session, I'd like to jump into the future from 2019 to 2022 and highlight some developments we've seen since this article was published. Keep in mind, 3 years ago. First, the combined market cap of crypto governance tokens today is at around 24 billion USD. And back in 2019, there were hardly any, let's say, governance tokens. Of course, any proof of stake protocol is a form of governance tokens, but there weren't that many out there. And today, the value of the governance tokens available in existence is 24 billion in 3 years. So there you can see the growth, and also that this prediction that governance rights, tokenized governance rights, have a value was actually spot on. Here's where you can find the numbers about governance tokens, may be interesting. And then, of course, we had this a couple of times in this discussion. It's a matter of fact that governance power is tradable and thus becomes a subject of speculation. And this poses risks and negative side effects, like in traditional finance, where aggressive hedge funds fund and then pump its operations before draining profits and exiting. And I guess this is the concern you've mentioned, like, okay, if we just look through the monetary perspective, what's the value of this network and how can we protect the value of the network? This is, I guess, the key question here. How can we protect the value of a network and not make it just a subject of speculation? And thirdly, I recommend to check out the Curve Wars because it puts an additional very interesting, let's say, new perspective and also a new flavor of how governance as capital assets are now, let's say, taken in and or becoming a new money Lego in DeFi. Yeah, anyone heard of the Curve Wars? Okay, I really recommend to check it out. If you are interested in what's going on here, there's a great podcast from Bankless. And I think this is also a great article about it. In a nutshell, Curve is a decentralized exchange for stable tokens. I think it's around 1 or 2 years old, so pretty young, but super successful. A lot of liquidity, becoming really the most important platform for trading stablecoins. And there is a governance tokens for Curve. It's called CRV. And holding CRV is actually incentivized via, you lock it and then you can really get incredible returns just via holding CRV tokens. Now, with holding CRV and locking CRV tokens, you can participate in governance. And the Curve war is basically a race between other protocols, Euro finance, for example, or convex finance, trying to ensure that their preferred pools are offering the highest CRV rewards. The underlying motivation is they want to have as much liquidity as possible in their pools, and they want to then also gain decision-making power, or offer decision-making power and then regain it. So users who lock CRV into, they call it VE CRV, are getting huge farming incentives. And here we have, in a sense, the Curve Wars has two winners. One is the CRV token. This token value increased incredibly. The price has risen over the last month due to these Curve Wars. And then also at the moment, convex finance with acquiring a lot of liquidity to their pools. And another development on top of this is basically DeFi bribing. Bribing sounds like, oh, what's that? Something rather than an attack vector than a feature. But actually, it's promoted like the latest money Lego in DeFi. There has been public platforms that offer bribing deals and bribing smart contracts off the shelf, basically with Bribe CRV finance. And this is, again, a way to offer rewards if you vote on a particular proposal, or if you join a pool and hand over control of your governance tokens, or if you lock your tokens for a certain purpose and you offer an incentives. And here we go. A couple of you mentioned participation is so super relevant, right? So we want to incentivize people to participate. Here we go, here we have it. The bribing, this blatant offering incentives for just voting in the briber's favor is this actual incentive. And still and they call it bribe, and still it feels like, oh wait, what's going on here? Basically, these are new meta smart contracts, new components where protocols will pay token holders to vote for their pools. And the assumption behind it that over time, it's cheaper to pay token holders to vote in a certain way than to try to acquire more tokens for yourself. So you could call it, you acquire governance capital temporarily. And again, the tokens and the smart contracts enable us to do so. There is, let me share here another one. Just days ago, Hidden Hand was launched, and Hidden Hand is cooperating with DeFi protocols like Balancer. And this is another platform to offer DeFi bribes. And I wanted to share this just to go from 2019, this notion of, oh wow, governance as capital, 2022, very, let's say, money Lego composable mechanisms to drive, to acquire, to direct, to steer voting power. And 404 page not found, I'll check the link. Yeah, let me hear your thoughts. Any thoughts here? I posted the link about Hidden Hand again.
Oh, can we just speak, or are you going?
Yeah, you can speak.
Okay. Yeah, I thought, well, hold on, my babe. He loves to sing. Okay. I found it quite interesting what you just said about how they have these bribes and things. That's mind blowing. That they would even term it such a thing. But that's the part that's so, interesting about all of this, because it's a lot of wickedness that is starting to pop up, and it's really sad because here where I am in the United States, we had Jim Crow and all these wicked, evil ways to keep people of, African descent and Indian descent from voting. And they would make you pay a voting tax or a fee. So I'm so against these voting situations where you have to pay a token or any situation I'm a part of. I immediately bring that up and say that's ridiculous. You shouldn't have to pay anything to be a part of your community or be associated, So I'm so against that. But then there's this wonderful tool that I learned about called Swarm. And it is a protocol that allows your governance or your community to vote. And it's quite interesting because you'll have the question and there'll be A, B, C, D, or A, B, C, depending on what could be the potential answers to the question. And everybody has to push the button or move their little icon to the answer that they want. And it's quite interesting how people will change their decision midway because they're seeing that people aren't really deciding the same way they are. And eventually everyone swarms to the one answer. I think that's the best and the coolest way to vote. And it's so interesting that the group can go back and look at the analytics and see who wanted to move or what percentage wanted to really be here, but then they ended up coming here. It is so fascinating to see what turns people's decision that, okay, my vote's not going to go, so I might as well go with the second best. And it's interesting if you just don't vote at all at some point, So I think that's the best way. I love Swarm. It's so interactive. It's kind of like a game, to get everyone to vote and participate. And I'm just so against the DAOs and the things that make you have to buy more tokens just to be able to vote. I can't stand that.
Yeah, thanks for sharing. And is there any link for us to explore Swarm? Because
actually, let me get that. I think I can get that out of. Do you want me to put it in our TE 360? Because I do have a connection on my other DAOs. Yeah.
Okay, cool.
Perfect.
Thanks for sharing. Stella, you've raised your hand as well.
Yeah, I think it was mentioned in the chat that bribe might not be the right word. So maybe we could call it being incentivized. Sounds more sophisticated.
What's the problem with the word?
I'm not sure, but wait, what?
I made that comment. I'm simply saying that these new forms, when you're taking out, and maybe you have a better explanation than me, Stella. That was a great point that was made, though. But I think with these new forms, especially with the removal of intermediaries, the language has to almost change from what the term even mean before, because bribe has a historical context that now may no longer apply in many ways, because of how the underlying system functions. As far as everyone is voting on the degree of which this incentive is placed, so that's where it becomes political, not just economic, is the language itself. And we've already, of course, seen new words rise as the result of these systems.
Yeah, bribe is very detailed. I mean, in fact, they call these mechanisms bribes themselves. The inventors call it bribes. And I guess then the question is, do we feel it's good and don't want to call it bribes? Or do we want to make do we want to feel better and avoid the term bribes? So that's my question here. But Stella, you wanted to.
I think the general question, like I wanted to say something about the use of the word, but the actual thing is that should we even do that, right? It reminds me a little bit of beginning 2000s in Germany, where there was this huge campaign which was called Geiz ist geil, basically saying stingy is being cool, right? And it educated a whole generation of people that, you know, buying at a cheaper price is a good thing. And now we have all of this like environmental impact to deal with, right? So maybe educating people to being incentivized instead of feeling that they are being rewarded by having a say, right? It might not be the right approach. I mean, I cannot say for sure, but, you know, looking at history and like trying to make people make them move in one direction and be like, hey, you're getting like more for what you have bargained for, right? And this is a good thing. And then it turns out to be a really bad thing, in fact. Like maybe it's the same thing with incentivizing people on chain to do like to follow a certain behavior instead of just feeling like, hey, wow, I'm part of this. Like this is a power I got rewarded with. And yes, I want to make use of it. Like we have the power to educate people on this. And I think we shouldn't fuck it up again. Sorry.
Thanks for sharing, Stella. Yeah, great point, Stella. And I think overall, to wrap up the session, I think it's really important that we stay very aware of this term of incentive, of our ambition also to, you know, we'd like to distribute ownership, how to best distribute it to be at a good starting point for our economy, since power distribution is hard to change. Second, how to incentivize people to participate, and what is a good way to incentivize and what is a bad way. Sometimes I feel this is also a matter of the ecosystem itself, right? What can be right for the purpose of one ecosystem can be wrong for another one. And lastly, what's the value of governance? Should this be defined in a market? What about how can we connect governance power and either monetary power or then other ways like reputation, trust, and then overall how this whole set of definitions can support the ecosystem purpose, which should be our ultimate goal. So this was the discussion of today. I guess we were really collecting a lot of the challenges for token engineers. I encourage you to dig deeper into the links we've shared today, and also to all the articles we've shared. And since this was the last session in this series, TE360, for now, stay in the channel. We'll keep you posted. We'll run new iterations of this series with different communities, with local hosts, and yeah, there's more to come. So I hope to see you again in the upcoming sessions. Thank you so much for joining today. Yes, we want more. I'd like to see you in other sessions as well. Appreciate the discussion with you guys. Thanks. Bye.
Thank you, Angela. Bye.
Thank you. Thank you, everyone.
Thank you.
Bye, everyone.
Bye, everyone.